In the 1990s, buy-to-let became very popular, with the deregulation in the housing market including the relaxation of rent controls, but also the introduction of a short-hold tenancy agreements. Now, what this meant was that landlords can now set rent rates, but also be able to evict their tenants. And this just made it more attractive for those buy-to-let investors. By the mid-2000s, the number of buy-to-let mortgages increased dramatically, growing from 3.9 billion in 2000 to 4.5 billion in 2007. The number of buy-to-let properties rose substantially, with estimates indicating over 2.65 million landlords in the private sector by the end of the decade, collectively holding over £1 trillion worth of property. And yet fast forward to 2024 and we're seeing higher mortgage rates and increased regulation, including the incentivization for landlords to sell up. In this video, I'm going to share with you the challenges that landlords are facing and the impact it's having on the overall housing market. But most importantly, the biggest threat in the rental market for both landlords and tenants. Stay tuned. Landlords who invested in properties in the last 20 years have seen huge capital growth in their portfolio. In fact, if we look at the Standard article, suggests that people who bought property in the last 20 years and sold back in 2023 can see that they have made probably around about £200,000 more than what they actually bought their property for. And this is in London. Now, if we look at the typical London seller who owned their home for 9.5 years, meaning homes in the capital earned £21,000 per year of ownership, data from Hampton showed. However, in the last couple of years, there's been significant changes, of course, most notably in the mortgage rates. The Bank of England, the last year and a half, have gone from 0.5% all the way up to 5%. And this has an impact, of course, on lending, which then has an impact on the yield that the landlords will get. And a lot of these landlords are now remortgaging and questioning whether it's still a viable business and whether they want to hold on to their properties or sell up. And looking at the impact of house prices, the Land Registry reports that we are up by 0.5% looking at December to January, and yet we are down 0.6% looking at the year before. And looking at what's being listed for sale right now, Rightmove found that the average price of newly marketed properties rose by 1.5% in March. And Tim Bannister from Rightmove said March is typically the strong month for asking price growth, as both buyer and seller activity levels rise and the spring season kicks in. And yet the stronger than usual price growth this March indicates that sellers are confident, one would probably even say over-optimistic, that there are enough buyers out there, enough activity for them to be able to achieve the top price that they want. And what I do know is during the elections, typically things do tend to slow down. Looking back at mortgage rates after Bank of England rate hikes, we saw buy-to-let packages rising up to even 6% on 2 years fixed. And also the 5-year fix was also substantially high, reaching levels we had not seen since 2008. With higher mortgage rates comes increased monthly mortgage payments. And this has, to an extent, been passed on to renters. But of course, renters also have a ceiling. And as we know, rents are dictated by the market, but also by the wages. So a lot of landlords have not been able to recoup the mortgage hikes that they've seen and be able to gain that again from those renters. And this combined with the removal of Section 24, which effectively means that landlords can no longer deduct their interest rates costs from their rental income, has been a combination that has really got them to think, is this still a viable business? And in 2023, we saw a huge amount of landlords exiting the market. In fact, there were 140,000 of them. And a lot of these accounted of buy-to-let investors make a big proportion of these buy-to-let sales. Despite higher mortgage rates, tenant demand continues to be strong. Of course, you have those first-time buyers that can't get on the property ladder because of the mortgage rates. And this is my opinion based on the data that I say, but I am curious. If you're a landlord out there watching this video, leave me a comment below. Let me know your experience in the last couple of years. Build-to-rent houses is the next big threat to landlords and also to tenants. I'll explain why. Knight Frank says that there has been a huge increase in single-family house building and surging renter demand and investor interest, and numbers could triple. So overall, it's more competition for landlords, for private landlords. So what this means for you landlords is that you've got to up your game, because these rental properties is built to rent, come with amazing amenities, they are in new condition, have great location, and just overall provides a great experience for the renters. Now, from a renter's perspective, you may be thinking, well, that's great. It's raising the standards and potentially even bringing more rental properties, which may level up the rental price. I'm not too sure about that, because these rental properties, if you go look at them, most of them are going to be above market value. So there's going to be more options for those renters who have enough disposable income and have good wages. But for those who haven't, that's going to be challenging. So if you want to find out more about corporate and institutional property investment here in the UK, make sure you watch my other video. And reviewing the most recent budget changes from the government and how that's impacted landlords, we look at, of course, the capital gain tax reduction. Gone from 28% to 24%. An incentive for landlords to sell up, I'll leave that for you to decide. And the removal of tax breaks for holiday lets, going back to that section 24, whereby landlords cannot offset their interest rates from their income. And of course, that's going to be pushing either landlords back into the long-term rental sector, or sell up or incorporate. Again, there seems to be a trend with government either wanting landlords to sell up or incorporate their business. And these changes collectively impact landlords by increasing costs and reducing incentives to hold expanded property portfolio, potentially altering the dynamics of the rental market. However, it's not only regulation and mortgage rates that are motivating landlords to offload their properties. There's also the factor of higher cost and inflation to run their properties, such as contractors. Also the fear of cutting their losses whilst they can, especially those landlords who've purchased the properties recently in the last 2 or 4 years, making sure that they can make the most of property prices now, just in case they do go down or dip. And for those old school landlords who did buy properties 20 years ago, they're just getting fed up with that regulation and just want to cash out. And if you're finding this video helpful, hit that like button so we can push more of this video to people just like you. So it could just come down to retirement. It's a fast way to release equity from a property and all the hassle that comes with it. And property in the UK is not the only kid on the block, right? I mean, you have got property investments in other parts of the world, but also other investments that can be probably more attractive. It could be savings, bonds, and dare I say it, crypto. Okay, so let's look at future trends. What we do know is despite all the challenges in the market, the rental market is going to continue to grow. Population is going to grow. In fact, right now we know, at least in cities, half of the population, the world population, live in urban areas. That's expected to increase. So do you think the rental market is heading the right way, especially if Labour comes into power, which by the time of this video we already know? Or do you think it's all a shambles regardless of what government comes in? Let me know with a comment below.